Okay, everything, let's clarify the situation. Since day one, there has been a growing expectation that XRP will reach a monumental milestone. $10,000 was not only a possibility but also a given and an estimate. That forecast just received a massive boost. We are discussing none other than Larry Finn of BlackRock endorsing this image, and he's not just talking about a pitiful $10,000 per XRP. Whoa, he's making it sound like a basic must. Before delving deeper into today's topic, let us briefly discuss BAS. I need a little help. To join our incredible community, simply click the like button, subscribe, and ring the notification bell. Hold on, it gets better. Imagine titans of finance like BlackRock and Vanguard, titans of finance, now seriously considering XRP for their international transactions. There have been murmurs about BlackRock. BlackRock is considering releasing an ETF that focuses on XRP. Yes, you heard correctly, but there's more. Hold on. Not content to stop there, Larry Fink is now examining the enormous $3 trillion real estate market and speculating about what lies at the core of its future. You guessed it. The XRP, the ledger, is ready to tokenize all transactions, with an impressive 1.2 quadrillion coming from traders and international swaps via ISDA. The association has set itself up to process transactions through XRP. We're not just talking about $10,000 per XRP here, Ledger and Ripple, that's child's play. We could be looking at a value explosion of up to $60,000. Let's jump right into the following section. Larry believes that BlackRock just released another explosive. He's not just speaking, he's acting as though Ripple and its digital asset, XRP, are about to do something very significant. He is tokenizing every aspect. We've incorporated a clip into our video. That will draw attention. We won't have to wait much longer because Larry appears to be confirming BlackRock's approach to an XRP ETF. Here's the clip you've been waiting for. A good way to legitimize it and increase safety is to wait for the release of the Bitcoin ETF. Permit me to state this, are you going to do another ETF? Consider an XRP or an ETF. You have Ether out there, I know that. Consider XRP. Could you respond to that? You don't want me to, and I can't. I perform well. I can't have it all. Give me the wrap, please. I'm grateful. We've seen a swirl of abnormalities in the cryptocurrency world in recent days, especially with this XRP image on the well-known exchange Crypto.com, whose value surged to an astounding $43,000. This is not a one-time occurrence. It fits into a larger pattern of XRP's value unexpectedly rising. Recall how just last week, we talked about a $7,000 XRP problem at a major exchange. Now, it's Crypto.com's time, and it appears that these abrupt increases in XRP's value are starting to happen frequently on several exchanges. However, let's shift our focus entirely to something else, something I learned through extensive research that is equally fascinating and unrelated to BlackRock or the recent surge in the XRP market. We're going to talk about Gary Gensler, the well-known SEC chairman who succeeded Jake Clinton. As most of you are probably aware, Gensler consistently rates XRP as a security. This is the interesting part. Robert M. Gensler, Gary's brother, is astonishingly similar in age to Gary. During this period, Robert played a critical role in T Price as its vice president, where a closer examination reveals that TR Pricing is not just any investment organization. It is one of the largest investors, with a significant stake in XRP, Bitcoin, and Ethereum. Thus, this has an interesting connection. However, Gary Gensler was in charge, and the SEC continued to classify XRP as a security. His twin brother, who works for a well-known investment firm, is a major investor in RP and other cryptocurrencies. It's an exciting position. That brings up a lot of issues. Given the complex forces at work in the realm of cryptocurrency investments and regulations, it's intriguing to consider the possibility that Vice President of TR Price, Robert Gensler, could have unique insights. Robert Gentler has unique knowledge regarding XRP's potential to be comparable to Bitcoin, and this argument becomes more popular when you take into account the company's large holdings in these three cryptocurrencies, while the SEC openly denies any insider trading. Numerous studies and papers focusing on insider trading and market manipulation have consistently highlighted the dubious nature of SEC operations. It seems that there is a trend. Emerging SEC officials seem to be educating their family members about the potential declassification of digital assets as securities shortly. These relatives then make early investments in these assets, and when the asset is formally deemed to be not a security, its value soars, enabling these friends and family members to profit handsomely from buying low and selling high in this situation. Let's examine the probability that Robert and Gentler had inside information about the SEC's possible defeat in a lawsuit against XRP from his brother Gary Gensler. Congress might push for a settlement based on such information. Between the SEC and Ripple Labs, astute investors can now purchase XRP at the perfect time, but as the cryptocurrency's price rises, buyers are shifting their investments towards Bitcoin, Ethereum, and most importantly, XRP, thereby adding another chapter to this story. The cryptocurrency community is abuzz with talk of XRP possibly rising to $10,000, $20,000, or even $60,000, especially from analysts who have been bullish on the asset, such as Jack the Rippler forecasts a sharp increase in value that could eclipse $589. Despite being audacious, this forecast highlights the increased interest and conjecture surrounding XRP and its potential in the cryptocurrency space. Wall Street is vying for a piece of the profitable XRP pie, and based on my intuition, the first significant move will come through an XRP ETF. However, let's delve deeper into this development. We have some fascinating news from Crypt Basics. An analyst's revelation that JP Morgan has made a significant move into XRP has piqued the interest of a former Ripple director. This revelation definitely made me wonder, and it's something we need to investigate more. The narrative proceeds as follows. An influential figure in the crypto sphere reported that Ben Armstrong, previously associated with the BitBoy crypto brand, had revived certain controversial CLS claims about JP Morgan's alleged involvement in XRP. This prompted a response from the former Ripple director, Armstrong. He asserts that JP Morgan currently owns a substantial 7.5 million XRP tokens. Armstrong continues by stating that this transaction represented roughly 7.5% of JP Morgan's overall fortune, but to put it in perspective, the math here looks wildly incorrect. Armstrong's figure doesn't quite match up because JP Morgan's total assets are a huge $3.89 trillion as of 2023 estimation. 7.5 million XRP, at its present value of $4.46 million, doesn't even come close to 7.5% of JP Morgan's wealth. Armstrong highlights the importance of JP Morgan's alleged approach and their covert XRP hoard. He claims that this positions JP Morgan as a rising force in the Bitcoin space. Therefore, Wall Street giants such as JP Morgan may be venturing into the cryptocurrency space, especially with the introduction of XRP. Despite the potential inaccuracy of the figures, it's important to acknowledge the entry of major financial institutions into the cryptocurrency space. It suggests a broader pattern in which traditional banking and the world of digital currencies interact, with XRP at the core of some intriguing developments in Armstrong's. Additionally, bold remarks have brought attention to BlackRock, the titan of asset management. His assertions that BlackRock has recently received clearance from its own shareholders are stirring up controversy. The Bitcoin ETF is now looking to invest in XRP. Portfolio Armstrong continued after it. He is also concentrating on the ongoing legal dispute between Ripple and the U.S. Securities and Exchange Commission, which is centered around their entry into the point is, even though the current legal drama indicates a strong conviction in XRP's bright future, imagine if this accumulation pattern is real. That would mean that major financial institutions are placing bets on XRP despite its turbulent regulatory history. The adoption of cryptocurrency by Wall Street was always inevitable. I've been discussing this for more than 5 years, but at the time, it seemed like a pipe dream. However, considering where Bitcoin is now and the likelihood that XRP won't follow suit, I would have to respectfully disagree that the question is not if but when. Despite this, Armstrong's image presents a specific scenario that merits further analysis. That may not be the complete picture, but, get this, the story becomes more complex in response to Armstrong's shocking assertions. Former Ripple director Matt Hamilton added a healthy dose of skepticism, questioning the authenticity of such a purchase as well as the real impact it would have on XRP, considering the token's enormous size. After receiving the supply, Hamilton takes out his calculator. Considering that there are 100 billion XRP in circulation, 7.5 million XRP is just 0.0075% of that total. Hamilton even joked, "I guess this is a parody account," in response to Armstrong's claim that it's a cheesy homage to the frequently surreal nature of Armstrong's pronouncements, implying that you'd practically need a satirical lens to make sense of it all. Since the math speaks for itself, let's examine it in more detail. It's obvious as day that the numbers don't add up, but Hamilton's analysis of the facts, which highlighted the blatant errors in the original claim, got me thinking. Where did this bizarre tale even start? Folks, I've done my research and found the treasure. I've located the source, and it's a biggie, so there you have it in the convoluted and frequently unclear realm of cryptocurrency. It's important to maintain your composure when reporting, and as always, I can help. You navigate these turbulent waves with confidence. The actual details, please remember that I am not a professional financial advisor, and the content in these videos is solely for your entertainment. I always advise viewers that before making any financial decisions, they should do their own research and speak with experts. I appreciate you watching, and if you liked the video, please click the like button. Also, don't forget to enable the alerts so you can be the first to know when I upload new content. I'm looking forward to seeing you in the next video. Take care.